corner, I thought we would take a look at financial markets. Today is not financial advice. Never is. The blue line is the S&P 500 here minus, and this I've just said, where we are year to date. And you can see it here, very unpleasant, not very, very good year, minus 5.3%, dramatically, however, better than you can see just a week ago. Quite an increase over the past trading sessions. That said, what has been going on unabated is the fact that the bond market is having the worst start ever, literally ever. The pink line here are the riskiest government bonds, meaning the longest dated, most sensitive to interest rates, down a whopping 13.2% for the year. The turquoise line is a shorter duration, meaning its price sensitivity is lower than the pink line, and even it is down 6.4% for the year. I thought what we would do from this point is take a look at what other portfolios would reasonably have done here, okay? And we just use this as a prototype. I'm going to go to this site here. So this is BlackRock's Target Retirement Fund. So people who follow the Substack, diversified portfolios run by professionals, run by modeling, right? The reason I chose BlackRock is because it's the advanced guy in the room, right? There's no question about their ability to calculate, create the model, and then make adjustments to the model, and then see what the result is. And that's really what I'm trying to show here, is to show kind of, even here, how good these groups have been to run a diversified portfolio. That the very high end here has actually outperformed. You can see minus 5.5% here, beating basically all three of these three lines. It goes to show you a couple of things. That number one, this group here basically acts without emotion. Their models told them something, they acted. Okay. The second thing here is that, and probably the most important takeaway for you, is not actually the absolute numbers here, right? For example, I could have flipped these, and I'm going to show it to you in a few moments here, right? I could flip this graph upside down because there's randomness involved, markets that we do not control. Nobody controls them, meaning that a single investor absolutely does not have any input here changing the results of these markets. The takeaway for you, when it's this volatile, is to compare it to your risk appetite. Some people, you don't like stomaching the up and down. Some of you get adrenaline rush from it. But that also needs to be coupled with your financial circumstance. And here's where I disagree with most of the 500-word articles, the 1,000-word articles that sit in the financial press. Because the ones that are just simply isolating on the performance of financial markets is only one piece of the jigsaw puzzle. More importantly, to everyday people, is the idea that you need to understand, or you need to at least recognize for yourself, whether or not this fits your financial spot in life. Let's just take a quick example. A person with many millions of dollars, they can stomach the up and down, right? They can withstand the volatility. That said, that same person at age 75 might have a very different outlook compared to the same person with the same amount of money if they were 45, right? The person 45 has a lot more runway, presuming that, both are in the same identical health. Right? So in other words, just because of the fact that they have more time for things to work out, for things to turn around. The same person at 75, however, right? Just because Father Time is undefeated, that alone may tell them that they don't want to have this amount of volatility. And that's for the person that is very well off. So again, the financial media is going to be talking about results. And I can understand that we have a results-oriented society. That all said, the main thing for you is the fact of whether or not you can stomach the volatility and this fits within your plans. The increased volatility has provided you very good insight into actually what's going on inside your financial holdings. And that is very, very valuable. Let's stop there. Don't forget to like and subscribe to this video. In addition to that, don't forget the free newsletter. The link is in the text below. Thanks.